Hello traders, this is Rich from Tradesight. This is the market preview for Thursday, June 19th, 2014. We had our FOMC decision and also the press conference, and the market did a little bit after that and broke out of the multi-day range that it had been trapped in to the upside. We put on 15 handles on the ES side, which was the relative strength winner. And we also put on about 23 handles on the Nasdaq side. Internally, the market was pretty strong on the New York side, plus 1,400 issues, really nice showing there. Nasdaq's side was only plus 600 or 700, which isn't really that impressive when you're grinding up against new highs. The 10-day, the intraday trend closed at 0.64, so we've got yet another real low reading in that, and we'll take a look at all those technicals in just a little bit. But first, let's take a look at the price action from the major futures contracts. All right, here's the ES futures. Broke out this multi-day range to the upside. Nice little pivot to the upside. Good range on the day. The takeaway here, though, is we are still shy of the previous highs, but the bulls definitely have something to build on here, releasing out of this to the upside. Level to beat to the upside is going to be about 1954.5, which represents the old high on the move. To the downside, the origin of this pivot, which is the 10 EMA, is going to be key support. If the previous high gets taken out, the 7/8 level at 1968.75 could come into play at the at that key GAN level, and then perhaps if we can keep rolling to the upside, this 2000 level, which is the 8/8 level. Nasdaq side of the market didn't have as much strength today on a relative intraday basis, but has more or less the same design on the daily time frame. So what we've done here is we've pivoted back up into the area of the previous high. So if the bulls can hold this area, they're going to have something to work with for next week. Note that the NQs are now 7 bars up into the seeker exhaustion phase, and that's much further along than the ES side. Key support is going to be the 8/8 level at 37.50. The bonds were pretty strong on the day too, but didn't release out of this multi-day range, so we're still trapped under this 112.50 area, which is the big 4/8 level on the GAN box. So while we have some resolution in the equities, we don't have it here in the bond market, so we really need that for a little confirmation. Oil futures a little bit weaker on the day, settling down below this 106.25 area, which is 8/8 on the GAN box. We're going to have support here at the 10 EMA, which is also coincident with the previous high here on this pivot. So that's going to be a pretty big area, coming in at about 105.25, 105.50. To the upside, this 8/8, this plus 1/8 level at 107.18, 81 rather, is going to be the one to watch. Gold futures kind of whipped both ways, but didn't really have too much to do before the end of the day. We did close up positively on the day, but didn't expand the range nor take out either of these key moving averages, the 50 or the 200 period. Lost a little bit of ground today in the 10-day trend, meaning the 10-day trend got a little bit closer to the overbought threshold, but the 0.64 reading is very, very low, and obviously that's going to be in the 10-day calculation for a number of days or weeks. So if we get another couple of low readings, that could really move the needle here and get us potentially towards that overbought threshold, but we're not there yet. The cumulative advanced decline lines were positive on both sides. We made a new high here on a relative basis here on the Nasdaq side, and we made a new legitimate high here on the New York Stock Exchange side. So right now, the advanced decline lines are pointing higher, which is definitely coincident or definitely in agreement with what we're seeing with the equity prices overall trying to move higher. So there's no divergence here, and this is in agreement with what the market's trying to do. Here's a look at the GDX versus gold futures. The GDX, I'm sorry, the XAU, which is the index of the actual commodity mining stocks, was very, very strong today. Definitely outperformed the actual gold futures here in the yellow. So what we're going to look for is a little bit of a catch-up here in the gold futures. So definitely make sure you have your levels available for either the YG gold futures or the GLD ETF, whichever one you prefer to trade. Here's a look at the Sox versus the NDX in the daily time frame. The Sox had a really nice relative strength move to the upside here, but we're starting to see a little tailing off here. So we're definitely going to need to see the other major NDX sectors picking up the slack here. We need to see some real strong performance, especially out of the BTK, to hold things up here. So while we're losing strength in the Sox, at least on a temporary basis here, we're going to need to see the other major NASDAQ sectors start picking this up. Otherwise, the NASDAQ is just going to run out of gas, which would be a negative for the market. So keep an eye on the Sox. If the Sox is just kind of treading water or pulling back, as long as the BTK is coming on strong and picking up the slack, it's okay. But if they're both starting to weaken on a more protracted basis, that's going to be a real problem for the market. As far as the individual sectors go, the XAU was definitely the top gun, plus 2.5%, definitely outpacing all the others. The utility index was also bid for today with yields dropping and money moving into fixed income. We saw the TLT strong, the utilities are strong, the transports were strong. A lot of that was transports probably attributed to the very positive performance in FedEx today, FDX. Oil index, the XOY, was also pretty strong. The airlines were strong, and the oil services were also strong, outperforming the broad market. So definitely seeing evidence of the late cycle stuff kicking in here, which is definitely a positive for the market. That kind of absorbs the weakness that we saw in the semiconductors. So as long as these late cycle plays are continuing to perform, that's going to be okay for the market. Here's a look at our top performer on the day, the XAU. XAU was very, very strong, taking out the previous high, and is now starting to get some distance above all the major moving averages. We're above the 10, the 50, and the 200. So very nice performance today out of the XAU. Got a level here at 3/8, and the big level is going to be 4/8 at the 100 level. Transports on the day were up 1.5%, but didn't make a new high. One positive is we did close above the 10-period moving average and the 8/8 level. Only 1 bar up here in this new startup phase and 3 bars up in the exhaustion phase. Those are the red numbers. So if the market can cobble this together, it would definitely be something that the market can do before running into any kind of a problem with the Tradesight Seeker. To the downside, the 7/8 level obviously is going to be key support. And then if that yields and gives way, static trend line here that comes into combination with the 50-period moving average is going to be the next level to watch. BTK still just kind of lifting here in kind of a reflation mode here. Still kind of unimpressive, and we didn't expand the range to the upside like we saw in the other stronger sectors like the transports. If we do continue to the upside, this 4/8 level is going to be big at 28.12.5. Oil services index was up about 0.75%. Didn't quite challenge the old high, but got really close to the previous high close, which is right here. So not too far to go to get there. We are again in the overbought area of the Gann box, but are not quite that extended off of the most recent pivot. Notice the stack of the major moving averages were above the 200, the 50, and the 10. So for now, still positive as long as we can hold above that 10 EMA. The banking index, the BKX. This is an early cycle play. So this is really something that should have topped out before, and it did. You can see the move to the downside. The transports and the oil services have been a little bit stronger on a relative basis, but we're still above all 3 major moving averages. So this is positive price action. The BKX. We're going to have some pretty good resistance here at 71 3/4 and 72 area where the 8/8 level comes into play. So keep an eye on that. And if we do break out of that, then we can start talking about the plus 2/8 level into the downside. Obviously, the low here from earlier this week, last week, is going to be important. And finally, let's take a look at the Sox Semiconductors. Did close fairly weak today relative to everything else. We are in the overbought area of the Gann box here, above 8/8, so we're definitely feeling the effects of that. One thing to keep in mind though is if we do start to go sideways here and base above 8/8, there's still plenty of plenty of time left here before we run into an exhaustion warning from the seeker. We're only 4 days up as of now. All right, folks, as always, thanks for listening. This has been Rich for Tradesight, and don't forget, tomorrow is Thursday before options expiration, and we definitely could see some more options unraveling. And if we do, make sure you're trading in harmony with the trend and don't fight that one.